Jens Moestrup Rasmussen, Lead Portfolio Manager, Value Equties. Can you give us a quick update on the performance for first quarter 2010?
Yes, the good wins we saw for equity going on in most of 2009 has obviously carried on in the first quarter. Our funds, talking about the global value fund, was off a bit more than 11%, roughly 2% in front of benchmark. And obviously this has been a very good start of the year.
What has driven these returns?
Some of the looking at our portfolio, it's very much that looking at the regional allocation. It's been Japan has been a very positive input in the portfolio, and also looking at the sectors, we saw that the sectors like the industrial sector, where we have a huge exposure, and also even the financial sector that's sort of had a hard time in the past years actually performed very well for us, and especially the financial stocks that we hold in Japan performed very well for us.
What has happened in Japan? Japan didn't perform very well last year, but what is happening now in the first quarter?
It's even looking at the valuation, we spoke about that in earlier interviews, that the valuation is on a very historical low level, obviously very attractive on that account alone, but also it seemed like a lot of results expected to come out of the companies in Japan was not that bad, and obviously this surprised the markets, and people start realizing that maybe it's time to have a bit more exposure to Japan, and obviously this has affected this in a positive way.
Greece has been on the lips of a lot of people recently. How has this affected value equities?
Obviously, the negative impact from the problems with Greece, having a lot of exposure to Europe, has affected us with the, you can say, people don't like to hold euro-related companies. This has had a negative effect, but it's I'd say the problems in Greece is a sign of the times, and also very much in line what we are preaching these days. It's still everything. It's much more. It's much nicer to expand your lifestyle than the opposite, and this is what we experience now. There's nothing like free lunch and free money, and there's been a lot of first aid handed out to save companies around the world, and now the bill is coming and you have to pay this, and this is still everything. You can say this is on country level. I'm not sure we'll see countries go bust, but on the other hand, it's also what we stress a lot. Why we like strong balance sheets in companies is that we like companies to be master in their own house, so they are sort of in charge of their own destiny, and that's why we are quite positive about the outlooks for value stocks in the coming years. They actually have the financial strength to take opportunity of this crisis we are running through in that aspect.
In the beginning of the year, you were expecting more M&A activities. Have we seen this activity?
Seems like the trend has turned and it's upward now. It seemed like there's increasing activity around the globe. We've seen Japan actually performing very well, increasing activity also during the crisis, and even in our part of the world, you can say Europe and the US, this is also picking up. And this is, as you will recall, will have a very positive effect on the way we invest, where we tend to end out in a lot of takeovers. Historically, we had more than 40% of the stocks leaving our portfolio has been by M&A activity. So obviously this is a very positive outlook in that respect.
So if I have money to invest, is it still a good time to buy value equities?
I think this is really a window of opportunity. Looking at the valuation of fund today, in the more than 12 years I've performed this, we are still around the lowest valuation that we've seen in this period. It was obviously lower in March 2009, where we sort of hit the bottom, but still looking at the valuation of the portfolio, the average fund, the average global fund is trading below book value, and the price you're paying for earnings power is also historically low. So there's tons of opportunity to invest and have good returns in the coming 3 to 5 years. So yes, it's a window of opportunity to get invested in value stocks going forward.